Hi, this is Kerry Artak with Wicked Stocks, bringing you the Daily SPY Report for Monday, November 29th, 2021. Before I jump into the charts, just please click like if you like what you're seeing, if this is helping you out in your SPY trading, your SPY analysis, and certainly subscribe. Subscribe to the Weekly Stocks YouTube channel. Will apprise you of notifications each and every time new content has been uploaded to the Wicked Stocks YouTube channel. The Daily SPY Report goes out each and every trading day by around 6 p.m. Central Standard Time, Chicago, for the next trading day. And before I jump into the charts, I just wanted to let you know, if you're not a Wicked Stocks premium member, we put out a couple of premium videos on General Electric and JD.com last week, offering timely analysis in both of them. I encourage you to become a Wicked Stocks member. Premium content is only $25 a month, and that's all I'll say about it right now. Let's jump into the charts and take a look. I'm actually going to walk you back to last week, to last Friday's charts, just to remind you of my thoughts. And, these thoughts have been the same thoughts I've had for, well, about a month since we approached this long-term resistance area that's presently at 477.45, this long-term trend line we tested in September. We rallied to within 1% of several times over the last several weeks. I've been mentioning how holding below it will keep this market prone to bearish rotation into December, January trade over the next month or two. That 440.28 formation in reach. The only indication for that clearly would be closing most recently below the 464.93 channel bottom, which we tested last week. We rallied nicely into Thursday, but lo and behold, a new COVID variant emerges. And Friday, the day after Thanksgiving, November 26th, we gap below that structure, continue south. We didn't test what I consider to be the next 3 to 5 day target, and I'll get to that in a moment. But let's actually jump to the charts. This is the 465.19 channel bottom. You can see the 477.83 long-term trend line now well above the market. 465.19 is our weekly resistance. I don't know if we'll see that or not, but if we test it, it can contain weekly buying pressures. And as I say, below which 440.64 remains a 3 to 5 week target. We may get down there much sooner. Let's talk downside today. I still have the 455.52 3/8 Fibonacci pullback. Now, there is a full channel extension in the 455 handle. And I don't think we even tested that last Friday. We came close to it. But really, I'm just sort of fine-tuning this right now in terms of an area that can contain selling pressures, possibly into midweek. We could get a decent bounce off of there, potentially all the way back up to that 465.19 formation. But just know that holding below 465.19, I'm adhering to a 3 to 5 week downside objective at the 440.64 midterm channel bottom. Now, there's a reason to consider the possibility that we may actually gap below this 454.05 area. By the way, 454.05 is the September high. We fell off from there, obviously, into the October low. 455.52 is a 3/8 Fibonacci downside retracement using A, the October low, against B, last Monday's high. And so on the way down, let's just call it the mid 450s, we could bottom out here for several days, back up into the mid 460s, where we could top out through next week, and from there fall back again with 440.64 remaining a 3 to 5 week downside objective below 465.19. Now, I mentioned that we may actually gap below 454.05 today, and I say that only because that this latest variant is highly transmissible, and even among those who've been fully vaccinated, that's their preliminary evidence. Now, the jury is still out, and the scientific community is going to be dicing all this up. And we have about a 1 to 2 week time window from what I'm reading, whereby we really won't know to what extent the present vaccines are or offer resistance to this latest variant. So there's a lot of fear, a lot of uncertainty in the market. I invite you to watch my DIA, IWM, and Triple Q weekly video that I put out. You may have seen it already. I do go over the crude oil market there. A crude oil West Texas Intermediate last Friday placed a sell signal that's pretty significant. Now, it's the very earliest stages, and at the very earliest stages of these significant sell signals is the most sort of vulnerable time where the market, all it has to do is rally just a bit into Monday, and we're right back into more of a neutral to maybe even bullish framework for crude oil. But right now, it looks to me as if we may fall from present $69 roughly all the way into the low 50s over the coming weeks with regard to crude. And, the last time this happened like that, all what broke loose in the stock market, and we had the big COVID sell off. I'm not expecting that, but what I think is reasonable to expect is 440.64. And if we gap lower today, below 454.05, then let's take a look at the support and resistance levels. You can see that we've got minor points, 53.19, 51.91, 51.05. But I think if we gap below 454.05, you should anticipate 449.95 intraday. By the way, those session containment levels, 449.95, 444.38, those are the half and 5/8 downside Fibonacci retracements. Very similar to the 455.52 that you can see is the 3/8 downside Fibonacci. I don't have them all charted out. I'm just letting you know that they're just pure Fibonacci downside retracements from the October low. And so if we gap below 454.05, 449.95 in reach today, and then of course if we close today below 454.05, we actually may test that 440.64 channel bottom by Friday's close. Hate to say it, but it just might happen. And in any event, closing below 454.05, I would say by the end of next week, at the latest, we would then likely reach the 440.64 intermediate channel bottom. And I say intermediate, it's not long-term, it's mid-term, but it can contain selling through December. And from there, who knows what? By that point in time, we may well have learned that all the vaccinations we've had are offering full resistance to this latest variant. No harm, no foul, no worries on the international community, and off we go to the races again, where we rebound nicely, possibly even push to new highs as we move into January trade. So I'm sort of painting a broad brushstroke picture here, and I have no idea whether that's going to pan out or not, but I'm going by what the charts are telling me. Let's talk upside today. 465.19 is our big ceiling right now. If we tested it, we'd close a gap. That is oftentimes a buy signal in itself, but I'm going to stick to 465.19 as our ceiling for the week, below which the 440 is expected by the end of December. If we push through 465.19 today, I think you've got 469.73 as an intraday possibility, and that is nothing more than the high settlement price from about a week ago or so, maybe a little more than that. It could be, it was the previous week. That was a short week last week. So it looks like about Thursday of a week ago last Thursday, we put out the all-time high settlement on the daily chart itself at 469.73. So I'm letting you know that if this market perks up and pushes through 465.19, which I find not likely today, but if so, 469.73 in reach today, where we can place a daily high. But overall, just know that if we close back above 465.19 today, I think the market has shrugged off a significant sell signal into December that neutralizes that bearish tempo. And with that, I would expect by the end of next week or sooner to once again reach that 477.83 long-term trend line, where once again we'd be able to top out at least on a weekly basis, if not through December, and below which this market remains prone to bearish rotation. Let's talk about the possibility for things getting ugly. I mean, they already are in terms of this COVID variant reemerging. But I think it's worth taking a look at the long-term charts. And you can see the 477.83 long-term trend line. You can see the 440.64 intermediate channel bottom. And you can see the long-term channel bottom at 426.03. We may test that as well. Hard to say, obviously, right now. I'm going to convert this all to a weekly chart right now and show the exact structure, really, And you can see that that 477.83 trend line on the weekly chart is 478.92 as an average, and that 426.03 channel bottom on the daily chart is 427.94 as a weekly average. If we test that 427.94, that offers support able to contain selling on a quarterly basis. So I'll just say through Q1, and from there we can push on and up to new highs to the trend line at 478.92 within several months of that. But if we were to close below 427.94 on a weekly basis, and I'm not saying this to alarm you, I just, obviously we need to see where is this thing going if it gets ugly. And ugly would be a settlement, obviously, below 427.94. And then I think under that scenario, if we close below 427.94 at the end of this week, then we're probably just another 1 to 3 weeks away from continuing all the way south to what I would consider to be ultra long-term support at 380.95, and that extreme channel bottom well equipped to contain selling through 2022. You never know, maybe the decade itself. And then from there, over the course of the months to follow, we can recover and push on to new highs. I'm trying to think if there's anything that I haven't covered. I'm going to go over the support and resistance levels here with you once again, just to affirm that we've got mid 450 support that's likely to be tested today. If we don't gap below it, if we open above it or at it, it is an area that just may contain selling into the middle part of the week, and from there we can rally back to 465.19 within several days. On the way up today, 462.04 offers intraday resistance. We can top out there initially, assuming we open below it. We're likely to fall into the mid 450s today, but if we push above 462.04, 465.19 is in reach where we can place a weekly high. If we can close above 465.19, as I say, the 477.83 long-term trend line then likely to be retested by the end of next week. Downside today, if we break or open below 454.05, 449.95 in reach where we can place a daily low. And I'm just going to remind you that all of those minor points are carefully chosen. They are legitimate price support and resistance levels in their own right. They're just not significant, but they are well suited for aggressive day traders. So I just want to leave you with that. I think that's all that really needs to be said for Monday's Daily SPY Report. Please click like and subscribe. It helps me out a great deal with regard to web presence, YouTube presence, so forth and so on. I will be back tomorrow for another Daily SPY Report. You have a great evening, and we will talk soon.